Okay, let's get right into it. These are my stock market buys for the week of April 6th through April 10th. So first off, I'm going to go ahead and start with what I sold off this week in order to move some money around and do some rearranging of the portfolio. So if you watched last week's video, you know I've been cutting this name, ATI, just trimming it here and there. Not necessarily because I don't like the company or the valuation. If anything, I think in the short term, my biggest thing is just two other names that I've been acquiring as heavy as I can, SOFI and Zeta, are very attractively valued right now. So I've been cutting this just to transfer the money over there because I think the actual risk reward is set up better for those two companies. So this has just been more of a rotation. Additionally, I just filed my taxes yesterday, so bank account's hurting a bit. I owed quite a bit more, and that sucked. But whatever, we adapt. So, starting off with the first one, April 9th, I sold off 2 shares of ATI. These 2 shares at $160.28. Total amount was $320.57. Then I went ahead and sold another share on April 10th, that Friday, for $159.81. Additionally, I am currently putting in $400 of my own money consistently every week. So this credit I've gotten from this, as well as the cash, is what I've been using for the buys this last week. So we're going to go ahead and start off with Adobe. This one I've just been more nibbling on this position. I already have a pretty big position built, but the valuation is just so disgustingly cheap right now that I've been adding it to my portfolio, but it's already getting to be such a large position that I don't want to be crazy aggressive with it. I have a decent sized position built out, so here and there I may add a little bit, but I'm not going crazy aggressive with my buys. So April 9th, I bought $100 worth of Adobe. That was 0.43 shares at $229.90. And of course, I'll be throwing up the actual screenshots of the buys themselves this whole time so you can easily follow along. Now, I'm going to skip Zeta for now, and I'm going to go to SOFI, which I told you those two are the ones I've been buying. So, for SOFI, if we go ahead, and apologize if you can hear the cat in the background, that's my sister's. He's outside the door, but he's just meowing, so. But anyways, so on April 7th, I bought 13 shares of SOFI at $16.08. This was for $209.04 total price. Then I went ahead and I bought another 7 shares at $16.18 for $113.30. And then finally, on April 10th, that Friday, I bought 3 more shares. $16.19 is what I paid. Total amount, $48.57. Like I've said in the past, I'm trying to acquire as many shares of SOFI as I can right now. Ideally, I'd like to be able to double my position size, if not more. If I could get it to 500 shares, I'd be great. I'm currently sitting at 216. The more I've done business with them as somebody who keeps their savings with them, the more I am starting to understand how much they actually do have so many growth levers to pull from and their actual run rate. And so it's kind of just built my conviction into where I'm comfortable putting more money in it. For example, the biggest one, I didn't think I'd be a SOFI Plus member because I was already getting, the API of like 3.5% on my savings by having my direct deposit. I only had a little bit sent to the savings over there in direct deposit, so it wasn't even a ton of money, but just something to go there, get the 3.5. However, I got an offer to raise my API to 4.5% on up to $20,000 worth of savings if I signed up for SOFI Plus for $10 a month. Ran the numbers on what I have in savings, plus they had a bunch of additional benefits. Like I said, I had to do taxes. I did it through TurboTax. I always do. Got a 20% discount just from linking the SOFI. So things like that, as well as a bunch of other benefits that I saw on there that I like. And it made it really easy to just, okay, let me just sign up. I set it to pull from my savings, that $10, and I'm getting 4.5% interest, which I'm making more on the interest than what it's actually costing me. So just kind of seeing that, I'm like, okay, that's starting to build my conviction more and more that it's going to really grow more members and more members actually signing up for subscriptions, which is going to help for the growth numbers. But yeah, that's more of just me getting more conviction in there. So I'm more happy to purchase more shares, because I'm always a little more cautious on banks just because of how it can be a little more complicated on how their financial statements work versus a traditional company. Anyways, let's move on to my favorite, Zeta. Because, man, okay, so first let's go through the buys, and then I'll kind of not even rant a little bit, but just rave, I guess would be the best term for it. So April 7th, I bought 7 shares. Or I'm sorry, April 7th, I bought 12 shares at $15.61 for $187 total. Then, on April 7th, I came back and bought another share with some money I had left over. So $15.70. April 9th, I came in and bought another $100 worth. So 7 shares at $14.74. And then April 10th, I came in and bought another $100 at $14.78. And I'm just going to be real. I'll likely be selling more ATI next week, and I'll likely be transferring that into Zeta. And this one, I already previously read through the company, but this weekend, and I've just kind of revisited some of the numbers. And I watched one of the interviews with the CEO, and my conviction on this company has just grown and grown. And I don't see why it's getting caught up in the whole AI scare with the whole Anthropic deal going through. Because if anything, they're one of the biggest net beneficiaries of AI. And so I guess to touch on a few points, 2025, 120% net revenue retention rate, which means if they didn't acquire any more customers, they'd be growing 20% just from their existing customers. They're targeting right now for the end of 26 for, I believe, around 40% revenue growth. Now, 40% growth, their forward PE right now is under 20. PEG ratio is well below 1. And their return on ad spend for their customers right now is sitting at 600%, which in simple terms, if you spend $1 with them, you're going to get $6 of return. And this has been something where it's reminding me so much of whenever I was investing in Palantir, because really the turning point for me, because for most people don't know, because I don't think I document any of this, but when I was buying Palantir, and one of the key things that made me comfortable putting more money in when that stock price was going down is, I believe it was in the fourth quarter 2022 conference call. There was something where Alex Karp mentioned that, I believe it was for BP oil, they dropped the cost of a barrel of oil from $15 a barrel to $6 a barrel. It was something like that. I may be wrong on the quotes, but the actual general idea, I think it was BP oil. But anyways, in my head, that's when I kind of ran through it and went, okay, if they're dropping that much, if one person is doing that, everybody else, every other competitor in that industry is logically going to have to do something similar or go to Palantir, or else they're going to be so far behind, they're going to get wiped out and lose too much market share. Same thing I'm seeing with Zeta right now, where I'm like, okay, they're getting 600% return on ad spend. They're going to start pulling to where everybody's going to be funneling in to acquire that, because they want that return as well, because if not, they're going to get their market share and their lunch just stolen by other people who are embracing the product. Not to mention, I forgot the exact name, but there was an actual like AI convention. It was more on the marketing side. And in 11 of the categories, they scored a perfect 5.0 on there as well. Hope of the conviction as well. But the main thing, Athena. Athena's their AI product. Really reminds me of Palantir's AIP. And with Athena, they just launched it this year. They were mentioning it back in the fall, but really the actual rollout of Athena was happening more in the February timeframe. And they're starting to roll it out more and more. And I think with how this LLM goes on top of that ZMP network, it's going to make it much easier for newer customers, maybe more mid-sized, to just easily start integrating this and seeing the return. Which I personally think is not only going to possibly raise that 600% return on 600% return on ad spend, that will possibly go higher because of that. But I also think it's going to make the acquisition process of newer customers start to accelerate at a much more rapid pace, because it's so much more simple to acquire. And their moat, I just think the moat is so strong. I don't think people are valuing enough how much data they have. 550 million users, 5,000 to 9,000 attributes about per individual they have information on. That is a lot of data. And really, the more I thought of this when I was trying to do kind of my SWOT analysis on the company, and I was really thinking of threats, the only threats I could think of that could possibly even be a threat to them and kind of touch that moat are some of the Mag 7 companies. So I'm thinking like Facebook, Amazon, obviously Google, Microsoft, just because they have such a large user base, so they could compete with that actual data, that database, in terms of the quantity of data and the quality of data. But when I'm thinking of any other competitors in their space, besides for the Mag 7, I can't think of any other companies that could even come close to touching that data. And I know I've seen some people talking about how, oh, why don't other companies just acquire some data and do the same thing Zeta's doing? Well, the actual CEO, he mentioned something very important. You can't just acquire the data. It took them 20 years to set up the actual infrastructure to get this much data, mostly through live intent. And also, the other thing he mentioned, you can't just buy data warehouses and use that to run your AI and get a good return. You need constant, fresh, new data. And what makes that Zeta network so strong is not that they have this huge volume of data. Of course, that's important. But the thing is, that data is constantly updating day in, day out, because of all those opt-in email chains they have that are actually feeding new data. And it's that new data. You need new, consistent, constant data. Because if you're thinking about it from a consumer point of view, if you have data from 5 years ago when they were looking to buy a car, and now you try to advertise a car to them, but they were looking for a car 5 years ago, they have one, and maybe now they're more interested in, let's say, a house. You don't know that if you have the old data. You're looking at previous data. You need fresh, new signals, as freshly updated as can be. And like I said, the only companies I could think that could even come close to competing with that are those Mag 7 companies. And I just don't see them coming in at scale to disrupt Zeta, because I think a lot of them see much more return just using that data themselves, that first party data, to improve their own family of apps, for example, with Meta, or just improving AWS with Amazon. I think they benefit more and they can monetize it more just using it internally for their own products. Whereas I don't think they want to necessarily take that and start helping out, I guess, the third party side outside their ecosystems. They want to bring everyone into their ecosystems. And that's how I've been thinking about it. So the more I thought about it, I find even those threats as not too realistic to actually occur. And I truly believe this is a multi-bagger stock in the making, as much as I'm looking at it. So I am buying as aggressively as I can. And maybe I'm wrong, but I don't think I am on this one. Every time I look at it, my conviction grows. So now that I've kind of been talking for quite a bit on this, and I've gone through all the buys and sells, I just want to get into a quick mindset. This will likely be releasing Monday. I'm recording this Sunday the 12th. Market looks like from futures that it's going to be a down day tomorrow, so another down week. And I'm just saying, push through the volatility, guys. Just consistently buy. It always pays off. Unless you think the US economy is never going to grow again, you should be buying. Whether you're buying individual stocks like me, or you just go and get an index fund and you keep it very simple. That works as well, but don't overcomplicate this stuff. This is where the actual wealth transfer happens. It's in periods like this where the gap between the super wealthy and I'd say more the middle class start to close as those asset prices go down. If you want to take your portfolio and you want to go launch to the next level, you need to be buying at this point. There's a lot of uncertainty. I'm not saying it can't go down more. You could put $1,000 in this week and a month from now it's down 20%. But will it be down 20% if you were to buy an index over the next 5 years? Probably not. It's probably going to be a whole heck of a lot higher than right now. And you really just got to have that conviction and consistently buy. So that's kind of my spiel on there. Make sure you protect your income, get more income than expenses, keep buying consistently. If anything, if you're able to afford it, buy more heavily. And I'll get back next week with my updates on my buys, but it will probably be a lot of the same thing. But if anything, y'all know I'm consistent with it. So I'm going to end it right here.